Alright guys, we're gonna be continuing this video from this time. Yes, the title of which we're reading is today the price action video and course that I was teaching you people on a live video. I'll be continuing it right now, and yeah, I'm gonna be talking about I'm going to be reading and then explaining what I'm talking. So I'll just start this reading from where I stopped from, and I'll just continue reading. So this is the support, and support a price level or zone where buying interest is strong enough to overcome selling pressure, preventing price from falling further. Resistance, a price level or zone where selling interest is strong enough to overcome buying pressure, preventing price from rising higher. Role reversal, flip levels. Once a major support level is broken to the downside, it frequently flips to become future resistance. Conversely, once resistance is broken upward, it often becomes a future support level on a retest. Rather than drawing thin line levels, professional price action traders draw supply and demand zones. These are areas where price moved aggressively away in the past, leaving behind unfulfilled institutional buy or sell orders. So this is telling us that if you want to get better with your analysis, you just need to do this drawing of supply and demand zone. You need to spot out areas of level using a box where you just use that to graph supply and demand zone. They tell you not to draw support line like this one, where it goes up, and then that's support line. Unprofessional, they say, are doing this is resistant. But if we talk about the supply and demand zone, how to actually graph them, we're going to be using this box. This is the box you're going to be using for supply and demand zone. So if you wanted to do a supply and demand zone analysis, you draw a box like this, and instead of using those support and resistance trend lines, you can just simply use the supply and demand zone levels by using this box. Okay, this box can also tell you a very significant price level movement. Of course, I told you that the resistance is when it is moving and then moving. This is support and this is resistance, and then the box can just help you outline where the institutional has been doing their thing. So like they told us here, role reversal, this point where we're reading, role reversal flip levels. Once a major support level is broken to the downside, it frequently flips to become a future resistance. So that is telling us that if you drew a line like this, it can just break and become another line. If this was a support, it could just break and then become a resistance. So instead of just trying to use this line to graph your support and resistance, you can just use the box to do a supply and demand analysis for a proper trading analysis. Okay, so it says these are the areas. This is where we're reading, and it says these are the areas where price moved aggressively away in the past, leaving behind unfulfilled institutional buy or sell orders. So that is when we draw. Let me go to the MetaTrader 5. So all this here can leave us a way of saying the market did some movements. These are where institutionals were actually doing their thing at. So supply and demand can help you do the trend line spotting appropriately rather than drawing lines. So let me go 30 minutes so you see what I'm talking about. So there are different ways to drawing support and resistance. If you drew this like this is a support and this is a resistance. But this is another way. I'll show you another way to draw it by using the supply and demand zones levels for key level spots. So this is supply zone, this is another one. So supply and demand can be used as a way of actually understanding this properly. So you can see, instead of the line, I'm using the box to just spot out this area. That is to say, because I've used this box now, when the market will just go ahead and do all this, if it touches it, I know this is the area where a support was retraced, and then I call it a resistance. And then when a resistance, then a resistance will become support and start to do a movement. So let's go back to what we were reading and look for more. So the section 5, high probability price action signal patterns. When price reaches a key support or resistance supply demand zone, look for candlestick trigger patterns to confirm your entry. Pattern name, type, visual. Pattern name, type, key visual, characteristic, trader psychology. Pin bar. Okay, if you're looking for a pattern name to actually enter a trade, you look for pin bar, you look for armor, you look for reversal, you look for small body near one end, very long wick on the opposite side, at least 2 to 3 of total length. Aggressive rejection of high low prices. One side completely took control before market closes. Bullish bearish engulfing reversal. A large body candle that completely covers engulf. So we're talking about this is telling us that engulfing candle can be an entry signal. If you do not know engulfing candle, let me take you to the chart and show you what engulfing candle is in this pattern. So what is an engulfing candle? An engulfing candle is a candle that totally overtake the previous and tells you it is a sell. Let me look for a perfect example of what an engulfing candle is right now. So if I was looking for an engulfing, this is a perfect example of an engulfing candle and can be used as a signal entry. So when we see engulfing candle, we can use that as an entry signal for a trading opportunity. So this, let me just say, this was my previous support and resistance level, and when I got an engulfing pattern, the market reversed and I can enter a sell because of this big red candle that engulfs this one. Engulfing candle is something that covers the previous. If this was the previous, this bigger circle is engulfing, and when an engulfing shows up, it means there is going to be a total reversal of what the previous market played to be. So when there was an engulfing candle here, the perfect example shows that when the engulfing showed up, the market started reversing. So if you took an entry here, let me clean this chart so it's clear. So when you see an engulfing candle here, you can then say you can anticipate for an entry signal. So an engulfing candle showed and you can enter a trade. Now I'll go back to the reading so we see more. So now bullish bearish engulfing reversal. A large body candle that completely covers, engulfs the previous candle's body. Strong shift in market sentiment and overwhelming momentum in the new direction. This is where we are reading, so you are not losing track of what we are reading now. So inside bar continuation, breakout, a small candle whose entire high to low range stays within the previous candle range. Period of market consolidation or build up of energy before a explosive break. So they told them we're told to use inside bar candle as a continuation, a breakout signal for entry. Okay, remember we are learning patterns to use to enter. That is the section 5, the high probability price action signal pattern. So we can use to enter the market. So we have seen a perfect example of an engulfing candle. Now I will show you a perfect example of an inside bar, a continuation breakout. And the meaning is a small candle whose entire high to low range stays within the previous candle range. Period of market consolidation or build up of energy before a explosive break. So explaining that would require an example for better understanding. If you are looking for entry signal using this price action trading, you need this. So what is an engulf? What is the inside bar? So this is this is another example of an inside bar. You see this candle here. Of course, this is a green candle. An inside bar is something that stays in within that green candle and made a movement to the downside. And you can see when it is a red candle, it actually tells you to sell. If you took a sell here after you have your price action confirmation from a previous break level of support resistance, you get that pattern, you get that candlestick, you can use it to execute market for a potential win trade. So when you see this break of structure, that is a trend. This is a retest. What can I call it? A support line was given here, and the pattern when formed, it became an entry signal. So and it's an inside bar, very close inside of this one that you see here right now, that is taking it to the lower side. So you enter a trade here. When you enter, you can see that your trade is a winning trade. So that is another perfect example of what we are learning here. And of course, you can see that inside the MetaTrader 5 app. Let me use this to show you better. This little drawing here is another example of an inside bar candlestick movement. You can see that this is particularly engulfing. If the vice versa, if this was here, then it is an inside bar. So that is a good example to helping you understand what an inside bar candlestick pattern confirmation is. So the section 6 of this reading is the 5-step execution blueprint to turn price action analysis into a profitable trading routine. Execute every trade following the systematic process. Now, number 1, determine market context. Step 1, analyze higher time frames, e.g. daily or 4-hour, to identify the dominant trend, uptrend, downtrend, or ranging. Number 2, mark key levels. And step 2, identify major support resistance zones and supply/demand area on your charts. Then number 3, wait for price to reach the zone. Step 3, be patient. Allow price to move into your key level. Avoid trading in the middle of nowhere. Number 4, confirm with price action signal. Step 4, look for a valid confirmation candle at the level, e.g. pin bar, rejection, or engulfing pattern. Number 5, manage risk and execute. Then the step 5, set a logical stop loss just beyond the candlestick pattern structural high low and target a minimum 1:2 risk to reward ratio. So with that being said, I will just give you a perfect example of what I just read to you right now, so you can see we are told to use higher time frames for entry confirmations before we take a trade. So let me just illustrate perfectly a trade as though we took it in the back test, and then we would see the results in the real time. So let's go to 4 hours to start this analysis with. Let's use this this box this particular time. I'll draw a line there, so we have it as the historical area where we want to start this analysis from. So you can see this red line that is drawn here. That is where we're going to start this analysis from. Imagine I was using a market structure to execute and trade. Imagine I was using what we just read to execute a trade. So I'm going to use the 4-hour time frame. From looking at the 4-hour time frame, we were told to use we should mark key levels. Let's not forget what we were taught here. We were told, let me grab this so you see it. So we were told to identify major support resistance zone, supply demand on our chart, and then we wait for price to reach the zone. And step 3, we're going to be patient and allow price to move into our key level and avoid trading in the middle of nowhere. We're going to confirm our entry with a price action signal, and then we use the confirmation candle to enter. So these are 40 different things we are told to do right now. So we are using the 4-hour time frame to identify our dominant trend, and that's the first thing we have just done by opening the 4-hour time frame here. So I just did the marking of key levels. So the step 2 is that I will identify major support and resistance zone, supply and demand area on your chart. So let's go and do that before we execute a trade. So we have done this now. Now use this to identify the resistance. So now that I've used the 4-hour, I've drawn this supply zone on this 4-hour time frame. This is a very good area. I've already graphed out a supply zone that is somewhere where the market was doing a major work at, and then I'll go to a smaller time frame like 1 hour. And when I go to 1 hour, we'll look for a support level that will help me execute this trade. So I will draw a line like this one, and when you see that I have drawn it, I will now use this line to mark out my entry. So I would look at this chart now. I saw there was a support and a resistance that took place here. Market structure gave me an entry, so I would enter here. So this is where I would have entered. So when I entered, my stop loss will be above here, just this red line. I would use this engulfing candle as my entry, and my stop loss is going to be just above the candle before the engulfing, and my stop loss is going to be 1:2. So if I said this is my entry engulfing candle, stop loss for instance is going to be let's see, my stop loss was, my stop loss was 463 points. My take profit will be 900 points. Let's just use 900 points as an approximate. So let me zoom out so you see properly. So after that I have done that, my take profit is going to be around here. So 900, that is 1:2. So if I took a trade like this is where I would take my profit at, after using the engulfing candle. So I have already met all the protocols, and then I even executed a trade using the pin bar, using the engulfing pattern. And even if I wanted to use a pin bar or a rejection, you see some pin bar candle here in the entry area where I took the trade at. So I showed you where was the entry. So if this could have been another area. So this is a pin bar. I could have also taken a trade here and made my profit 1:2, and as a pin bar candle. So you can see that we met all the criteria and executed a trade that went into profits using this back testing for what we just taught you guys today. So people, my dear subscribers and viewers, thank you for watching this video. I would end the video here. I hope you learned something very useful today. This is the price action course. You can use this to start making money in the market if you have not been making money before. So I'll see you in my next video. I'll make another video like this one, just to keep your knowledge moving in your education, and it's going to be getting better about forex trading market, and you're going to be a profitable trader in the future as you work with this trading market. Hopefully, if you trade well for 3 months, you should be able to bank in a lot of money for yourself. So see you in my next video, and bye.